John, I was going to say rainy Mondays always get me down, but then I realized it was Tuesday and I feel like the week's flying by.
Yeah, it's going fast, and so is the month of June. We have the June 30th report. This is going to be so important for numbers wise for you guys. You're going to want to listen to this episode. We're going to break down a little bit, but we'll go through what these numbers mean going into the June 30th report, what you should do with old crop corn, what you should do with new crop corn, what's the deal with beans. We're going to go over all of it.
Let's go.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I see wheat like the start of the week.
Yeah, it's a lot of rain in North Dakota. And, you can't say that it's made. There's a lot of things that could go wrong still. But when you get a drink like that and more in the forecast, you're going to get down 24. At least that's what July hit today. So when it rains, it pours. I mean, it's, not to use that as a...
Literally. It did.
Yeah, literally. That's what's happening. So but let's go from bad news to worse news. We're in the window now, starting June 21st. Actually, it's June 21st. About August 14th is what the window is. Corn has gone down 14 out of the last 15 years. Generally, beans are going with corn. And wheat is succumbing to harvest pressure, even though, they have half a crop. So there's not a lot of good news out there. Now, that's just short term. The seasonals really work. What really screwed everything up is the wheels came off this way before it should have. Like corn was never really high priced. They took all the weather premium out before we saw any of the weather. And that's really made another challenging year in corn and beans and everything else.
Turned out they were right.
Yeah, it turns out that they were right with the weather, which stings a little bit. Are the weather guys that good, or are these guys just front running the seasonals now? Because we're not lasting to summer anymore. There's going to be a summer that there will be a weather problem without a doubt. But we've ran into these 3 years of near ideal weather. I would argue this year is nowhere near what the last 2 years have been. You could be fairly confident that we were going to have a very large corn crop by this time of year for the last 2 years, 24, 20, and 25. This one, all bets are off. When you get cooler, wetter weather, generally that does not mean higher yield. Rain makes grain, of course. But here's where the numbers are, and here's what's tough in corn, is that the numbers are not very far away from being really bullish, even with a decent sized crop. I mean, if you go down 3 bushels from the 183 mark, which is going to be wonderful. I think the 5 or 6 year average is 177, somewhere in there. And we were always in the 170s till the last 2 years where the weather's been perfect. Now we're in a more normal year. Granted, there's rains falling, a lot of it too much for people. But that's the kind of stuff that takes the top end off. And let's say we land at 180 with a million less acres on June 30th. These are just hypotheticals. We go down to 1.5 immediately, what does that mean? 1.5 billion bushel carried over versus 1.9. It would mean that we're going to be closer to $5 than we are to $4 for most of the year. At 1.5, you don't have much of a buffer. And you don't need to be high priced to where you price people out of the market, but you're going to be in that 475, 490 mark very, more often than you're not. But what do we got going on here? Are they going to run it down and do the seasonal? Or did we never really go up there? And now that we come off 70 cents, is that the seasonal? And that's really the toughest question you got right now is if you have old crop, and we talk about this all the time, you want to start breaking these what do you call it? Just these cycles where you're holding all this old crop into July. It hasn't been working for a few years now. It's not working again this year. So where are we? Are we going to go down? Or are we going to stabilize here? And really, no one knows the answer to this question. The
I was just going
seasonals.
to say yes.
Well, Ryan thinks he knows.
Yeah.
But the seasonals are decidedly down, but we don't have a really high price. So what have we done over the last 2 years? And let's run down really quick what potentially could happen and what a guy should be looking at here. We've gone to $3.95, I think, for December for 2 years in a row, and that's happened by early August, which is exactly what the seasonal is. Now, the funds, which is important, have liquidated a substantial long position. And they were long 300,000 at the top, and now they went to zero, and they did all that in 10 days. So if you feel bad about your marketings, don't. I mean, that you don't see funds dump 300,000 contracts in 10 days ever. I mean, it's the quickest they've ever left, and that was before we saw any summer weather. So to say that this was inevitable and you should have been way ahead, like you could make an argument if there's rain in the forecast right now, we're at 480, that you would be making moves and doing something. But now that we're down here and we have no idea what the crop is, do you make moves down here, or what does history say to do?
Yeah, well, I do want to bring up a point, though, that I hadn't thought of it that way.
Yes.
The fact that I hate to use the word only, but I'm going to. The fact that we're only down 70 cents while the funds pulled 300,000 contracts out does tell you how much demand is actually out there.
Yeah. Yep.
If corn wasn't in a somewhat good position from exports and where we're at for demand and stuff, pulling 300,000 contracts out could have been significantly more than 70
Yeah, if you have 2 billion bushel carryover and demand's, very so-so or questionable going forward, you're going down to 370, with that kind of liquidation. Yeah. But to your point, yeah, that they absorbed it because we're already at fair value right now. And I'm not saying it's going to go down. We're already at a price it does not need to go under. We're at record. We're at record demand, and we're moving it better than we ever have, which is really disheartening if you're raising corn, because demand isn't solving this problem this time. And that really hurts. We're in a new dynamic where we just simply have overproduction, and the strongest are going to survive. And what's even making it worse is even with fairly good marketing, you're breaking even, if you do really well, or slightly making money. And I'm talking timing it fairly perfect. And if you're doing better than that, you're taking substantial risks. There's really not been enough meat on the bone to make a lot of money in corn. We're too good at producing it, and that is the issue. And normally demand gets you out of it, or a little weather bump, and we're just not getting any of that. You're not getting any story that's hoping alleviate some of this pain. So it looks like another year of this. But that being said, that June 30th report is going to be full of fireworks. We could add 2 million acres like they did last year. We could take 2 million acres away, it would bottom corn instantly. That is a number that is going to move the market significantly. Look to buy volatility going into that, not sell volatility. Of course, the renegades will sell volatility, meaning sell calls and sell puts. But really that is known for a very unpredictable and very volatile reaction to the report. If you take 1.5 million acres away from corn and it goes to beans, you're going to see, fireworks. In vice versa, you take 1 million acres away from beans and put it in corn, you're going to see substantial fireworks for beans to the upside. This is a very volatile report, and we did talk about owning the straddles. And what was it? What was the bean? Beans were really high. Corn was high for what it looked like he could do.
I have corn up, so let's start there. Yep. I don't remember. I'd have to go back to last week and listen, and please do.
Yeah. I don't think it's changed much.
I think it was 32 cents last week. I think.
And that's in corn.
I don't remember in corn.
That's buying the put and buying the call. You do not need to know direction. You need to know that it's going to move a lot after the report. 32 cents is a little bit steep.
So this week it's 26, which is getting more. Like, to me, that's more reasonable. That's better. The August, more better.
You were about ready to say more better.
I was going to say more reasonable.
Oh, yeah.
I don't think it's I wouldn't call it a good deal yet.
No.
But that's the August contract. There are 31 days.
The guys that have sold it actually are winning so far. They've gained 6 cents since last week.
Yep.
Yep. And then, ultimately you would need corn to move 26 cents And that is the August one that you're looking at,
That's
obviously.
August, yeah.
By the third Friday in July. And, that to me seems like kind of a tall order with the market that we have.
Yes. But there's a report.
But there's a report. But the beans, much richer premium, but you're likely to get a bigger move there. Are we recommending buying these? Absolutely not. It's good to go.
We're recommending analyzing these and see where they are and where they move.
Because you have a report that's going to move the market substantially. If the corn gets bad news, they're going to press corn to the lows without a doubt.
Do you know what September beans are at? 11.20 or so.
11. Yeah, that sounds right.
Okay, 40 cents for the straddle.
Is that a September straddle?
That's an August straddle.
Okay, August. So you have
Based on
how many
September
days?
contract.
How many days is that?
Or is it an August contract? No,
There is an August bean contract.
Okay, so
that's
it's based on the August bean contract.
Yep. Yeah. And then how many days is that? I know it's third Friday. 31.
Yeah.
So you're looking for, and the total price would have been
40 cents.
40 cents.
40 and a half. Let's be clear. Let's be accurate.
So you can see there's only a 14-cent difference between corn and beans are generally a lot more volatile than corn. It's not always the case, but so you can see why I see the bean as more valuable, because you're going to get this powerful move if the numbers aren't what they think they are in one direction or the other. Beans are more likely to move than corn. That's why I favor the volatility there. Now, we talk about this. Is a guy actually going to do this? These are numbers I'll run by clients. We'll talk a little bit on the Insider on Thursday about it. And it's a personal decision. But recognizing which reports to do this in can be tough. This June 30th report is known for very large moves. I wish I did have the moves, for beans after this report, but there's been 70-cent moves after this report.
The call skew is crazy in beans right now, by the way.
Yeah, let's go back to what we should be doing. For me, corn's easier. It's just like, we've seen this cycle before. We've seen two large crops. We've seen this good demand. Goes at 395, quickly comes out of there. That's a scary number. But quickly it comes out of there, settles in at 410, 415, which we're not even very far away from right now. Mm-hmm. And then ultimately works up to 430 by December of 2024. And then 440 by December 25.
So put your buy orders in at 394.
if you're gonna buy, yeah, these guys.
You want to be a couple cents under.
Yeah,
so you get missed.
So why?
It's not a recommendation.
Why panic unless this is way bigger than what they think it is? Way more acres, unless the acreage number goes away. Why panic right now when over the last 2 years with these large crops, we've seen better prices than this. Sure, it's not going to be fun to sit on this for that long, but that's really where you're at. Unless you want to give it up at this price, yes, you could gain 30 cents. We
talked about a reason too in the last episode, though, that maybe doing it on paper is better.
Yeah, and hopefully, guys, listen to the last episode. And basically, I can sum it up for you. And this is just generally saying every area is different and has different programs. Quit paying all this storage and all this interest on storage when you can simply own a call for less money. It's going to match up with your 5,000 bushels just the same as storing 5,000 bushels, but it'll have a lot less risk because you only pay the premium. Break that pattern where you're paying all this commercial storage. Many people don't need to do it. They just don't know how to do anything different. Call us and we'll be more than happy to break down all the numbers with you. That's actually one of the more important episodes that we've had as far as tightening up the numbers. So if you're sitting on this corn, likely we're going to see prices above this. That's what the last 2 years have told us. Of course, it doesn't have to work out that way. What I don't like is the U.S. dollar with these interest rates likely to rise now. We don't know, but we got a new guy in town. What is it, Walsh?
I don't even know.
It's one of those. Anyway, this guy comes in. He's like, we're not giving any forward guidance. We're doing what we got to do, which means they're not going to give a lot of hints. They're not going to talk a lot after and before. They're just going to do what they need to do. And he made it sound that they were more likely to raise than lower, talking about inflation. So we're going to be flying blind here with this guy, but it leans more like interest rates, thus dollar will go up. And when the dollar goes up, funds tend to press grains to the short side. And that's maybe what we're seeing with wheat right now, and corn's going to follow wheat. Now, let's talk beans really quick. Beans are really interesting, and they've been interesting for a while. We broke significantly from the highs. Corn like 70 cents, beans like 70 cents. Or
beans 70 cents in one day back in March.
Yeah. But then they crawl back and then they refell. But beans have not fallen like wheat and corn at all.
No.
And why? Why if it's not that bullish? Is it the domestic demand? Well, look at the July, November. What was that, minus 30 or minus 26? It doesn't seem like they need beans right now at all. So the spread up front is telling us they got plenty to get us, at least through July. Then why are beans hanging in here so well? And is that an opportunity? Should we be looking at protecting the downside here? Definitely, it should be. It should be looked at, especially through this report. There could be a nasty surprise in there, and beans could easily fall $1 from here. Where corn and wheat likely have seen their big sell-offs now. I probably just jinxed it, but you know what I'm saying? Like, there's one that hasn't, or the three, there's one that hasn't fallen very much. Beans have been mysterious for a long time, though. They just are really stubborn. The funds don't want to give up their long position like they know something. We don't know that they do. Is it going to be the renewable stuff for next year? Is it going to be the numbers look tight? Who knows? But they do not want to give up this position. So is there downside in the beans? There certainly looks like there's going to be.
It's the same answer as everything else.
Yeah,
maybe.
I don't like this seasonal window. Like, if it was a regular market last week, Ryan and I would have been really pounding the desk and recommending that you do something for the downside. Unfortunately, it fell 4 weeks early. And that it is what it is. The year before it fell in March.
Right.
These are not
February. Technically.
Yeah, February is when the high came in. These are not kind markets. The funds buy a lot and then they dump it.
But to your point, look at what the last 2 years have done. So you talked about corn.
Yeah.
And where it went. What about beans? What have they done the last 2 years? Similar crops, similar.
Yeah, last year was a lot better than the year before. Beans were really dogged, but it was, a lot of it, the trade war was kind of revving up, and then it kind of carried over into this year. Now, they didn't buy all fall last year, and they were, the demand was way behind. Beans were supportive because of the 81 million acres, which I mentioned numerous times. That's not going to happen this year. We have a lot more acres, but then we have that China demand back, or at least on paper we do. And China has been buying. And then we have the RVO, the new renewables are out, and the numbers say that, they're going to use this much, and there's this guaranteed demand, or so the bean market's trading. So the carryover is going to shrink for soybeans, and the carryover is going to shrink for corn as of the last report. Now, that's why this June 30th report is so critical. It's going to swing the numbers one direction or the other. So that's really the outlook. We have to see these June 30th numbers before you can make any decisions. And as a farm, as a hedger, I think you have to see these numbers before you really can plan for 26 going into 27. We are missing one of the most crucial pieces of the puzzle here, and that's the acreage. We just haven't seen what it is. And that's the kind of markets we're dealing with. They make you market way before you have any of the answers. This year it was weather and acreage, but that's just the way the markets have been working now. And there's not a lot a guy can do about it. I just, like I say, hate to repeat myself. It's very disheartening to see all this demand. Wheat, not so much, but you know what I mean, just in general. And then see this price action. It's just, it's hard to go farm when it just feels like you're just paddling upstream like a roaring river. And that's what grains have felt like here. Is there going to be opportunities? Yes. Look for singles and doubles, I think, is what you're looking for. Hanging on to positions hasn't been working. There's been a night and day difference between guys calling and getting out of stuff and guys hanging on stuff. Perfect example would be all the corn calls we bought last year. Some guys got out, some guys stayed in, and you know the difference there. The guys that got out, the hype in the war, made a lot of money compared to the guys that held them. So everything just kind of reverts back to where it started from. There hasn't been much buy and holds except for cattle. Cattle, every dip, buy and hold that, and that's the one market. Stock market. We were just talking about this today. why do we just continually short it? Why don't we buy it with a stop? Why doesn't a guy do that?
I mean, we both have a buddy that all he does is sell puts.
Yeah.
He sells puts every day, and he's fine if they get hit.
I mean,
he's glad to own it.
We may be able to put the top in the stock market, but why doesn't a guy do that? Like, you're worried about the big crash, right? Just use a stop.
I know how he's buying his land. I got an idea.
Yeah, use a stop. Maybe don't carry it over the weekend where there could be big news. You know, why doesn't a guy do that? I'm about ready to, which tells you the top's coming in.
Oh, I'm going to sell it.
Yeah.
Just let me know.
I'll let you know when
Not a recommendation.
No, but it's like, why does the guy take the path of the most resistance instead of the least resistance? The trend is...
We're contrarians by nature. That's what I've learned, John. You and I are contrarians, and it hurts us in our trading, but it's helpful for...
You have to be in commodities because they always fall. They always fall.
To hedge, you have to be a contrarian.
You have to be.
To make money on the market as a trader, I think there's a balance.
But it is a bubble. Like when you have, in the office building that we're in, there's a building next to us. There's a financial advisor in there. That's to the right of us. Literally, like we share a wall. Like, I mean, it's a full brick building in between, and then on the left-hand side of us, there's another financial consultant. Well, there's numerous ones in the office. So within, we could throw a baseball and hit 6 financial consultants in the head from here.
In a town of 14,000 people.
Yeah, and that's only beginning. I mean, then we haven't even talked to Edward Jones. How many Edward Jones are there in Fergus Falls with 14,000 people? There has to be at least 6 here.
Probably.
6 different ones with multiple guys in there. And then...
Not a sponsor.
Yeah, and then all the rest of them. And all they do is every day is watch everything go up. Must be the easiest job in the world. That's initially where I started at AG Edwards there in Fargo. I guess I didn't pick the wrong course. I picked the tougher course. That's for sure. But... it's a bubble. I mean, there's so many financial consultants, so many, and they don't have. When was the last time they were stressed? Back in the COVID, when it dipped for 2 weeks. I mean, that was pretty stressful.
Ultimate buying opportunity.
Yeah, it's stressful every day in commodities. Just so you know, these guys got away with. I mean, they got it made. But this market's going to quit one day. It doesn't work like that. But back to the general economy. It just seems like, without the Iran headwinds and the oil, that the stock market's likely to go higher, which probably will go lower. I'll let you know if I buy it. You guys can get on the short side. But I am getting there. It's just why not? Why watch it go up every day? Why not be a part of it? I just don't have the courage to do it. And it's definitely not a recommendation.
Absolutely.
But, back to grains, it's...
we do talk about it every day. We do every day.
We do. It does. It just bothers me.
And if we would have bought every time we said, why don't I just buy this?
Yeah, I mean, you could go back to 3 years ago. Why don't we just buy it? I'm sure we said it a million times. Sometimes it's more fun to fight it. But this bull has wore every bear that I know completely out. Is there a bear out there?
As far as the stock market goes, I used to be the ultimate bear. I mean, I shorted every dip. Yeah. I was the guy today with the little dip on the S&P. I would have been in there 3 or 4 times. Nope. I'm done. I gave up. I remember perfectly when this ended. I was in Las Vegas. I had lived there, worked at Siegfried and Roy, and in the apartment that we were in, I was sharing with a couple of my friends. And I had 2 monitors, and these are the big CRT monitors. There was no flat screens there. And the guy at Best Buy was super excited because I was getting a video card, which was unheard of stuff back then. And it supported multiple monitors. And he's like, "What do you do? Play a lot of games?" I'm like, "No, I just some day trading." And I was NASDAQ 100 at the time, and I didn't do it on a large scale or anything. I was pretty young. Anyway, it was just down every day, up like this, just red candles nonstop. And I remember after about a half a year of that, one day the candle was just green, and it just went straight up all day long. That was literally the bottom from the tech bubble bursting. And then finally bottoming. I mean, it took years, and I don't remember if it was 2004 or whatever. It's probably 2003. But I remember that day. It was just this candle that I hadn't seen, just straight up, and it really hasn't quit since then. No, I mean 2008, obviously.
2008, huge pullback, huge pullback.
Yeah,
and that's been the only major pullback.
Yeah. It has been 100%. If you would have bought from there and then just rebought in 2008.
Yeah, all you had to do was buy stocks. In 2008, I had this list that I made. I was going to buy all this stuff that was on sale.
Yeah.
But the problem is the government came and bailed it out, and everything came up so quick. And that's where we're at today. The government just steps in whenever there's a problem. Anyway, we won't even go down that pathway.
Let's talk about the government.
Yeah, let's talk about government and government payments. So back to grains really quick. Well, quickly cattle, we're getting to levels that are very attractive on the feeder board. We're back above cash or at cash for many contracts. If you need hedging, finally the board's a very usable deal for feeder cattle.
Okay, explain this to me on cattle.
Yes.
So the board for feeder is at cash or right around cash.
Yeah.
But
Or
for
above.
live cattle,
Terrible.
not even close.
The worst board I've seen in a while.
Why? How does that happen?
And where's the opportunity here?
Yeah, is there opportunity?
Yes, there is. And that is definitely the feeders versus live cattle spread.
Oh, bring your checkbook.
Bring the banker, your checkbook, and probably your college fund for your kids if you're going to be in this thing.
But
at one point has to come in line, to some degree. It is in the stratosphere. That's where the opportunity is. As a matter of fact, in the private conversation I have with clients, these are the hedges that we're working on, utilizing the feeder board where we can for even the live cattle stuff. It just depends on your cattle and obviously the weights and everything. But that is a much better board, much healthier board. But really, that's what you're saying is the spread's out of whack. It absolutely is. You cannot buy feeders and use the live cattle board for anywhere near profits. You cannot lock anything in. It's not even close. If you're buying feeders here, you're just counting on the live cattle going higher later. I mean, there is nothing you can do to hedge that in or profitability. So, but we've been dealing with this.
I mean, just for those who don't pay attention, the live cattle board's what, $30 under cash?
You can't, yeah, some of the contracts are upwards of $30.
30-ish, and the feeder board's
20.
maybe above.
Yeah, $20 for like October, December.
Yeah.
Your $260 last cash and your $240 for the futures. Very tough board to use for hedging. Very tough board for rolling anything. If you're holding your cattle longer, you're going to take a big haircut rolling from June to anything else. It's a mess. Feeder board is a very usable, and I'm not saying feeders can go higher. It's just in line or above reality, and that's a much better board to hedge with than the live cattle. So that's kind of a mess there, but the brave spreaders, they're going to step in that thing, and they're going to short feeders and go long live cattle or combinations of that. Maybe they're going to use options. And it is a very dangerous bet, but it has to come back to reality at one point. You're already seeing 2 packing plants go dark. The industry is not healthy. And I'm not cheering against lower prices, but I'm telling you, this is can't operate indefinitely at this. You're already seeing the repercussions of it that will have huge repercussions later on when there's a lot more cattle around. Others argue the cattle herd will never rebuild. Well, then are you going to go to a price that adjusts to a price where people buy a lot less beef? You don't want that either. You got to be careful what you're cheering for here. What you want to find is that balance where you can buy feeders and lock in a profit and feed them and the cattle crush. You want it all to work. They took all your money, the guys that were raising cattle for all these years, and now it's the guys that are raising cattle. They're in the driver's seat. Except for if you go too far the other way, you'll put all the packing plants out of it, and there will be nobody to kill cattle. Because you can't run at nonprofits forever, just like they did to you guys, the ranchers. The packers can't do that indefinitely either, and we're seeing that. So, back to hedging. Very good idea at these levels to talk to your advisor. Give us a call. We'll tell you exactly what we're looking at. But the premiums are down. Like you look at like a November put, they used to be $18, $19 for for a number of months. Now it's down to $14. So they have taken some premium out. Not that it's cheap, but you remember $18, $19 was guaranteed for any length of time. Now it's closer to $14, $15. So it is getting cheaper to do. You know me, I like puts a lot better than what I really don't like the LRP. I don't think it fits many people's operations. Certain operations it'll fit better, but you're much better off in the put, and that's a whole nother discussion for another day. But we'll end it there on cattle. It's a very good board to use for hedging for feeder cattle. Very poor board for live cattle, and there's nothing you can really do but wait for that to improve, and hopefully it doesn't fall. And then quickly we'll circle back to grains. If everybody's still with us here, got kind of long-winded today. Don't panic, even though this could get a lot nastier. If you have old crop, you're just going to have to make your decision before the report. First of all, they're going to make you make a decision because July is going to be in the first notice day, and you're going to have to sell or not sell. And I've been getting a lot of calls on that, by the way. And then, is it worth it to own some longer-term calls? We're going to be working on strategies that worked really good last year. And we'll share them in the Insider, of course, and then I'll put them in print as well. We're not quite there, but if we do have that spike down, we got to prepare for stuff for 27. And if you sell bushels in July right now, is it worth it to own calls? If there's not going to be a weather market, no. But if the report's going to be bullish, you could maybe make that argument. That's really the big thing. But we don't know what this crop's going to be. And I'll end it on this. This thing might be 178, might be 179, might be 183. To me, it looks like 183 is going to be a really hard market to hit. So if it's at 177 even, and it's a good crop but not perfect, like last year, the corn should already have bottomed. And we need to see that June 30th number. But with this kind of demand, I wouldn't panic down here, and I'll leave it at that.
Sounds good. Well, why don't you leave your number also then?
Yeah, and feel free to call, especially the insiders. That's part of the package. Call at any time, and we can discuss anything you need to talk about grain-wise or cattle. Hog-wise, that's also in there. 218-731-1578.
Thanks, John.
Sure.